right. Hey, everybody. Hope everyone can see this all right. Also, typing down here in the chat box.
Hey, everyone. How you doing?
Always nice to check and make sure. Cool. All right. So it looks like we're live and rocking and rolling. So I hope everyone's been enjoying the summit so far. We just had a awesome spike in our traffic here this afternoon as we were building up to the Q&A here. I know someone in here, we had a guest 289 was pretty stoked here. Cool. So how's the market been treating you this week, Felix?
It's been good. I mean, it's been actually amazing. As you can see today on the SPY, it's just most of the indices, they jumped up today. I mean, I've been loving this whole year in general because since I'm a short-term swing trader, all I'm looking for is volatility and movement, and it's been moving a lot this year. You know, you've had the greatest drop, I think, in stock market history for the first week of the year, which I shorted the heck out of, and now it's recovering. So I've been long for a while again. So just the way I like it.
Nice. Yeah, I was long for a little while, and actually right now I'm just sitting all cash. I got out of my positions earlier this week, and I'm just sitting and waiting for the next thing. Who knows what that's going to be? But
yeah, I mean, for a longer term trader, it's been a pretty sideways market. You know, I've got it open here. You see, it's been sideways for basically since 2014. Yep.
Nice. What time frame is that chart on?
It's a daily chart, but it's very, very small candles at this point. All the way to the furthest point to the left is January 2014.
Okay. So just a little over a year.
Yeah. I mean, now it's 2016. So.
Hey there, guest 758.
I'm sorry, guest 758. I'm not Tim G, but I'm Felix Hartmann. I'm also pretty good.
He is. You should definitely stick around. What kind of trader are you guys that we have in the chat room here? 289 and 758. Well, while we're waiting. Sorry, what was that?
I'm curious if they're viewing the video or if they're simply in the chat room.
Yeah, it is a little bit delayed between the video and the text. I've got a second computer set up here to watch it, so there's a little bit of a delay, but we're good. Day by day trading. That works. That's a pretty good one. Trying to be. We're all trying to be, aren't we?
Day by day trading. Yeah, I mean, you know, in the beginning, it's really important to just like play with different types of trading and see what's really your type. You know, I know a lot of people, they just go immediately for day trading because that's the thing, that's what's cool and trendy. But at the same time, this person says, can't hear you. Do you hear me, Jacob?
I can hear you all right.
Okay. Let me pull my mic closer. Let's see if it's any better. Sorry, guest 289. Thanks, Chris. No audio at all. I do hear both of you. So there seems to be some
little bit of a toss-up. The first thing I would say for anybody, well, I guess it doesn't help to explain to them in audio if they can't hear me. Can you hear us all right, 289?
Hello. All right. Do you just want to roll?
Yeah, let's just we can keep going, and hopefully it'll
All
catch
right.
up for those who are
Because
having
if
some
two can't
struggles with the
hear and
audio.
8 can hear, I don't want to bore the 8 by not talking. So,
Yeah.
what are some of the questions you guys have?
Yeah, so go ahead and throw any questions that you have down here into the chat room, and we'll pick them up as we see. So one of the ones that I had sent to me earlier in was a pretty simple softball question for you. Actually, it was just, what is margin?
Margin. Okay. So margin is basically it's available on different accounts. So when you trade stocks, for example, margin is basically like the amount of money the brokerage will put up for you. Meaning, if I want to take a $5,000 trade, but I only have let's say $3,000, with margin you are able to do it, because in most brokerage accounts in the U.S., what you get for stocks, for example, is a 2-to-1 margin, meaning you can trade twice the amount of money you have. All you have to do, the margin meaning you have to put up 50% of the money. For day trading in the US, it's 4-to-1, meaning if I have a $5,000 account, I can day trade. Well, actually, there's a day trading regulation, meaning you need to have at least $25,000 in the US to day trade in a regular retail broker account. So with $25,000, you're actually able to trade $100,000. Why is that? Because basically you're not losing their money, since, first of all, like, it has to decrease. Let's say you're taking $100,000 trade using only the $25,000 you have. Once that stock decreases by, let's say, 25%, you basically lost all your money, and the brokerage will auto sell the stock for you. So it's basically a nice way to leverage, which could mean for you basically more profits. For volume-based brokerages, that means more volume. They're making more commissions, so they're getting something out of it, you're getting something out of it. If you're holding for a long position, meaning, let's say, for example, I want to buy Apple shares for the next 6 months using margin, I can basically buy twice the amount of Apple shares because of margin. However, they do charge an APR on it, so you will get, basically like taking a loan. They will throughout depending on the brokerage day, month, or year, charge you for the amount of money you loaned in that sense. So it's basically like a neat, already automatic, simple way to get like a quick loan on money that's automated through the brokerage.
Yep, pretty much. Just a nice little short-term loan to essentially incentivize you to do a little bit more trading. And one of the big risks that a lot of people will, I guess, kind of encounter would be things like margin calls. So that's when the brokerage says, hey, this position has gone against you for either a long time or a large amount, and we don't think that you're going to be liquid for it anymore, so we want that money back. And they'll just liquidate you out of whatever positions you're in. They don't even have to tell you about it until after they do it. And so that's definitely one of the big risks of using margin. So a lot of people will say, don't use it unless you are really comfortable trading. And then other people will say, well, just be really careful.
Right. So I guess the key to margin is that at first it looks like free money, great, but you have to realize that like a 10% loss on 2-to-1 margin means a 20% loss of your capital. So the biggest thing is that you have strict risk management rules, that you consistently use. If you want different levels of margin, like I said, in the US for regular stocks, you get 2-to-1 margin. For day trading stocks, you get 4-to-1 margin. If you trade Forex, you get 50-to-1 margin in the US. And if you join a prop trading firm like T3, for example, you get 20-to-1 margin. So a lot of day traders, they oftentimes join proprietary trading companies that give them such huge margin, because with only putting down $5,000, you're basically able to trade $100,000. Now, that sounds crazy, and you might think, wow, I'm going to lose it right away. But remember that that's basically just buying power, and you might make, like $10,000 trades throughout the day using that $100,000 buying power. And oftentimes day trades, they just move a few cents. Maybe they just move 0.5%, but putting that on 20-to-1 margin, now that 0.5 is turns into a 10% winner.
Yep. And then actually, it's kind of funny you mentioned prop firms. That's like a whole nother ball game is going into that field. They'll also have things like risk compliance departments that you'll have to have all of your trades audited by them to make sure that you're not being too risky. So they kind of put training wheels on you, so to speak, but really it's them trying to protect their own money.
Yeah, and that's interesting thing about a lot of like if you trade through a prop company or a hedge fund, and there's some very accessible ones, that you as a beginning trader you can join. They have basically a risk manager literally like looking at all the accounts being traded, and when they see, damn, you're trading, not following your trading plan, or you're risking way too much money, there's basically a second pair of eyes that looks over your shoulders to make sure you don't have one of those days where you just blow everything up, So this is kind of nice.
Sure, and that actually kind of ties into Chris's question here. Guest 327. Well, we'll get to your question here in just a second. But Chris asked, "Is there a broker that you prefer in the U.S. for a small account?" And you can't really ever ask this question or answer it without mentioning SureTrader. They're technically not a U.S. company, so that's kind of does it really answer or not? We're not really sure, but. You can open an account with them. They are considered to be an offshore brokerage, so they actually are able to bypass the pattern day trader rules, which only allows you a couple round trip trades per week. And they allow, I think it's 5-to-1 margin last time I checked. So that's one that if you want to do a lot of day trading, they're a good company to go with. There's just, the trade-off is that it's a little bit lower customer service and a few extra hoops to jump through because they're not incorporated in the US. Now, in the US, I guess that would really depend on how small that small account is. What do you think, Felix?
Looking for. But on the topic of offshore accounts, I guess I'll just say this because I've personally seen 2 offshore companies go down and they've lost a lot of people's money. Since it's a small account, start with a small amount and test, let's say 3 things. Try to do, let's say 5 before investing your whole account. Try to get maybe like 5 trades to properly execute, meaning you buy and you sell, and there's no slippage. Meaning maybe you sold at $10 and all of a sudden they said, oh no, it was $9.50. They're not screwing you out of money, because a lot of times those like create brokers that that have create websites, they say like, oh, you're getting like 100-to-1 margin, or they make all these great promises. There's unseen risks involved. For example, like slippage, that they sell you lower than you actually sold for. Or secondly, very important, try to withdraw money. Let's say I'm creating an account with $1,000. The moment that account is active, I would want to try to withdraw $100, because a lot of times, especially like the simplest way to find this out is research the company. And I'm not going to name names, but like some companies I've seen where almost every single review says, I've tried to withdraw my money, they wouldn't let me. Customer service would not respond. So that's just a very important thing, because you're doing this to make money. And if you make all the money in the world, but you can't withdraw it, it's not worth anything. So make sure that the trades execute properly, that you can withdraw money, and just a little bit of track record. If they just were created 6 months ago, be cautious, because a lot of companies are created 6 months ago and all of a sudden disappear in 6 months later.
Yep, absolutely. I would agree with all of those points. At the end of the day, it's do your homework. Now for, I guess, onshore companies, the one that I use is TradeKing. They're just a very simple onshore discount broker for $4.95 per trade commission. They don't have the best short list in the world. So if you want to do a lot of shorting, then they're probably not the one for you. If you are long bias and you have under $25,000 in your account and only want to do a couple trades here and there, then they're probably a good place to start. Felix, I think you use Options House, right?
Options House, yeah. That's the one I started with. Aside from a few crawls here and there, they've been pretty good. They have extremely low rates. So I'm still grandfathered into, I think, the 375 right now. It's 395. Sorry. Right now, stock trading is 495. Options is like same thing, basically up to 5 option contracts. Very cheap, very beautiful platform. Options House actually merged with Trade Monster about a year ago. So like they've got the best of both worlds. Very good for option strategies, very simple, because you get, instead of basically having to put them all together, a lot of option strategies include sometimes 3 or 4 different options, and it does it for you already. And it shows you the risk tolerance and basically all kinds of information you would want. The only thing that it doesn't have is that you can time stops, which I actually like. So basically, like what I used to do, and a lot of people don't do that, is that, for example, I say the stop is only active between 10 a.m. and 4 p.m. or between 10 a.m. and let's say 3:45, because oftentimes in the beginning 30 minutes of the market, there's a lot of volatility, and sometimes you get stopped out, even though the stock is still going in your direction. The way that is visible is like a lot of wicks. A lot of wicks happen in the first 30 minutes. So Options House used to have that. They no longer have that. I've sent them 1,000 emails to bring it back in. Haven't done it yet. But if you don't care about that, Options House is your thing. And if you want, I can send you a referral. You'll get, I think, 150 free trades. So, it's cheap. It's very efficient. It's got a beautiful platform and mobile. So, yeah. And it integrates directly with your taxes too. So it took me maybe 2 minutes and texts were done. So it's very convenient.
Awesome. Yeah, I think I've actually got both linked up to in the resources page on here. So if you want to look into them more, there's an easy way to check out more. And then I think Felix will have a referral link as well. So hopefully that answers your question there, Chris, pretty well. So I want to get back here to guest 327 asked, if you had a small account and you saw stock on a breakout, but the volume isn't spiking up, how would you go about the trade?
If you have a small account, so stock on a breakout, the volume isn't spiking. So the first question is, why are you saying small account? I don't know how that correlates. Small account, big account, I guess. The first thing I'll say, if you have a small account, you got to look at smaller stocks. Like let's say you have an account of 2,500 or less. Look at stocks at the 50 range or a little bit lower, because really the size of your account has nothing to do with the second part. As for the second part, you saw a stock on a breakout, the volume isn't spiking. How would you go about the trade? That's a good question. Generally, why is it doing that? Generally, the volume does go up at the breakout. I would wait maybe a moment. Well, actually, no. Here's what I saw. I usually plan my breakout trades well in advance, and if things line up and the breakout happens, I just do it, because the thing is, a lot of times when you're in a breakout early on, the volume might not yet be there, just because you're one of the first ones to join. With a breakout, it's very, very time sensitive, meaning sometimes in a few seconds you miss the whole move. So I don't really second guess myself with the breakouts. I set my patterns up. I see the up spike and I go in. That's for day trading. As for swing trading breakouts, I never enter the trade until 3:45 or after, because yes, in that case, for example, sometimes you have false breakouts and that will end up with a wick. But if the day closes on something that looks like a breakout, the next day will, it's like 90% follow. So with that said, just be fast, focus on your chart patterns, and focus on that everything else is in place. The volume will usually follow.
So you're not even taking into account any wicks on the candles, just the candles proper.
What do you mean the wicks? No, I do candlestick analysis.
Okay.
So let's say, for example, here, just because it works, I don't know how well you can see this. Oh, why is it still? That's why I have two different computers open. Makes sense. There we go. All right, sorry. All right. You see, so I mean, today was kind of a breakout. The only reason why, I don't know how much you can see. Let me pull on my screen. 3, 2, 1. All right. So there we go. Today was kind of a breakout on the QQQs. You got a pretty significant up move. The volume it's like almost double from yesterday, but it's not even the average yet. But still, with that kind of move, I'm highly expecting a continuation of that up until like 209. So when I look at things, I do look at candles. I look at candlesticks itself, meaning a 1 to 3 day pattern. I look at chart patterns. So for example, here, we had kind of a flag pattern, meaning it's a continuation pattern. So just basic example of how to do analysis. This is the TQQQ, meaning it's the leveraged version of the QQQs. So basically the NASDAQ times 3. You've got a double bottom here. That's when I got in. Very simple pattern. It's basically W. So that's the big chart pattern. And that's when I knew, this is going bullish again. You've got a massive up move. You kind of started running into the moving averages. So I also look at moving averages. The moving average kind of function as a resistance. As you can see, for the first time, the first time it moved down was after the first moving average. Went back up, touching the second moving average, went back down again. Now it's made another up move, and it returned, meaning it retested at that is the 100 moving average. So it retested on the 100 moving average, and in the shape of a flag pattern, and now it's made a big Marubozu move up again. Maybe sounds like a lot of gibberish to you right now, but I'm looking basically at more or less five things: chart patterns, candlestick patterns, moving averages, trends, and line analysis itself. And I mean, I guess you can count as lines or a separate thing, Fibonacci analysis.
All right, that was a good explanation of that. So we got two more questions in here while you were explaining that. First, we have from Chris. Different traders have a core to their trading plan. It might be a technical indicator, support or resistance, etc. What would you say is the core to your trading plan?
The core to my trading plan, let's see, some technical indicators. Well, so first of all, I'll say I'm an exclusive technical trader. I don't care about the news. I don't care about fundamentals. I've many times traded companies. I've known not a single thing about them. So basically, I only look at the charts and I go at them very fast. So as I said in my video, for those that watched it, for those that didn't watch it, on Sundays, for example, I would spend 3 hours doing my analysis, going through the charts. And oftentimes it takes me 2 seconds to determine whether or not it's a trade I want to take. So what I always want to look for is 2 things. My 2 things that I'm looking for is, one, I'm a breakout trader, meaning I'm looking for stocks that have been consolidating, that overall over the past, let's say 5 years, they have had a direction, but have slowed down since then and are getting kind of to a breaking point where there's not much more where they can move to. So I'm looking for those, and then I simply stock them. Stock them, meaning I'm putting triggers above and below up until the day when they finally break, and then I'll capture that move. Another thing I'm looking for is early reversals. So I'm looking for chart patterns like double bottoms, head and shoulders patterns. Basically, I want to get into, so in a way, I'm a trend trader, but my focus is less following the trend than getting into the trend from the very, very beginning. So unless I can see that the stock is fast moving and generally fast moving, but currently slowing down, or generally fast moving and right now about to turn around, I'm not really trading the stock.
All
so
right.
That's my core, I assume. And I mean, bigger than just the analysis itself is having my plan and my risk management in place, which I also talked about in my video, and I have some more stuff on my website. Basically, I risk the same amount of dollars on every trade rather than having the same amount of dollars invested, because I just look at it in a different way, which might be too long for tonight, but I've got some articles on that on my blog.
Yeah, and I think we've got your website linked up on your bio page. So if anyone wants to go over and read those, you can click through to Felix's bio page and get directly over to his website from there. So we had another good question here. You mentioned you were watching webinars and online lessons. What services did you subscribe to in your early learning days, and any opinions on the gurus out there? Have fun with that one.
Thanks. Okay. So in my early learning days, I mean, I give credit where credit is due. I got my education mostly in the beginning from TradeSmart University. So that's tradesmartu.com. I mean, they provide a lot of value. They have a lot of really good stuff, and they've actually improved their pricing program a lot since I started. Because when I started, they would sell courses for thousands of dollars. Now you're basically doing a monthly subscription for $40 to $100. So they basically teach you everything from chart, and they also teach only technical analysis. So that's kind of where I got that from. So they teach you technical analysis, options, forex, basically the whole thing. However, back when I started with them, they used to be like the main coach, who I consider my personal mentor. He used to be with them. They split paths. He now founded, it's called reallifetrading.com. Spell like the actual words, real life trading. His name is Jeremy Newsom. But for basically over 2 years, I haven't taken any courses anymore, or I haven't led any mentors. I mean, Jeremy, we're still very good friends. I hit him up every now and then just to get his opinion on the market. But I think those are both two great starting points. Trade Smart is pretty cheap. Real life trading is actually great because the whole mission is to enrich people's lives. So he's doing all the courses for free. So you can get a lot of value for free from Jeremy. And just like, if you do go ahead and like learn from him, drop a note, say, hi from Felix. He's a great guy. But as with anyone, and I guess that's where I segue into gurus in general, and maybe including the people I've previously mentioned, maybe not including the people I've previously mentioned. There's always a lot of good intentions, but there's always sometimes questionable intentions. And I think one of the biggest things you should look for, that I personally found, is that is the person teaching actually still trading themselves? Because a lot of times there's a lot of gurus and coaches out there that don't even trade themselves anymore. They talk about how they learned it, and like theoretically you can know it, but if they're not putting their own money on the line for what they're teaching, then I don't know, is it really worth it to learn from them? Secondly, what are their returns? And more than the returns, I find honesty in returns generally, and I brought this up in my video, on whether or not they bring up whether they have losing trades or whether they admit to making mistakes. And it's such a simple thing to admit to a mistake. However, oftentimes those that are lying about their returns, they're so afraid of being caught in that lie that they only say, like, oh, I killed it here, I killed it there. And usually they don't even tell you of trades. They just show you pictures of them at parties or driving probably like rented cars for a day and shit like that. So just look for legitimacy. I'm driving my Benz every day, it's mine. But just look for legitimacy. Make sure they have the lifestyle you want, and they have it through the means of actually trading. Again, I don't want to get into names because that will start a whole name calling battle. But I do know of people that used to be good traders, and let's say they made a few $100,000 over the course of sometimes like 5 years. Now, if you divide it by 5, you're almost talking an average shop, so it's not even that special. However, so they make a few $100,000 in a few years, but now they haven't traded in a while, and the millions that they show off on Instagram or that they show off everywhere actually comes from selling shit. So just be conscientious. Look for traders that actively trade, that post about trades, that you can hit up and you get actual good opinion, that when you get a stock pick, it actually makes sense on average. Yeah, I think that was a very lengthy response.
No, I think you covered that pretty well. And definitely for people who are looking into the guru side of things, Felix talks about it in his video. I think we've actually got 3 or 4 different people that all talk about gurus at one point or another. I'm pretty sure Matty Owens talks about it in his was yesterday. A really good one if you're looking for a mentor and you wanna really know how do you find somebody that matches, is going to be Jesse's. He also goes by Psycho on Wall Street. He's coming up here in a couple of days. Most of his story revolves around how he came to realizing that he needed a mentor, and then how to find one and how anybody could find one. And so that'll be a really good one to watch if you're looking for more info on that. So one of the questions we had come in here, Felix, was, do you have any advice on how to find good companies under $10 for a swing trade? They'll go on to say, how do I know it will go up in a few days?
All right. Okay. So the first thing I'll say is that the question's kind of pushing it, because like I only trade stocks above $5. I do not trade penny stocks, and I only trade stocks with an average volume of 1 million or more. So the amount of stocks that trade between $5 to $10 that have an average volume of 1 million or more, they're very limited. So I rarely come about them. How do I know it will go up in a few days? It's the same thing as every other stock, and basically everything charts the same way. Using my strategies and using my analysis, I've charted Bitcoin, I've charted Forex, I've charted and like not just charted, like I've profitably predicted Bitcoin, Forex, stocks, penny stocks, like anything and everything. So it's not really about whether the stock is $10 or not. Like if you have a certain plan, it will go up. So how do I know a stock will go up in a few days? Again, I look at, let's say, for example, breakouts. I look for stocks that generally move a lot and they slow down. If you want to compare it, you've got a kick-ass football team that always wins. It's kind of slow right now. So if you bet on the team that always wins, that just has a slow season, you're probably getting the football team for very cheap, and it's going to do amazingly the next season, as it always does. So that's kind of what I do. I look for strongly performing stocks that move extremely fast, but they're just in a slowing period. And in that slowing period, I buy it, and then it breaks out. Yeah.
Yeah, that's definitely a good one. And you actually go over in your video your criteria that you look for and how you put together a plan. And so those are exactly the kinds of questions that you'd want to be asking when you're putting that plan together. It's what must be there, what must be there, what should be there, and what cannot be there. I think those were the three that you outlined.
Exactly. Let's see. When a stock is in a consistent uptrend, let's say 3 to 5 days or so, and then has a red day, whether it's big or small or medium, what are you looking at when you go over the stock? Okay. So on average, first of all, the average uptrend, no matter which time frame you're looking at, I think was between 4 to 8 candles or 3 to 8 candles. So if a stock is already at 5 days of green candles, it's probably overextended. Now the red candle doesn't have to mean, the red candle can mean different things. It can either mean it's continuation, meaning it's just a small side track and then continues to go up, or it's an actual reversal. So the first thing I do is if I see 5 days of going up and a red candle, I'm not buying. So that's the first decision I'm making. I'm not buying. Am I shorting yet? No, because it's just one candle. It doesn't mean much. What I'm specifically looking for is, and I said this in my video, since I do micro swing trading, and that answers another question on here. So my trades last 2 to 5 days, and I want that the minor trend follows the intermediate trend. So I can actually visualize this finally here. I've got my intermediate trend going up, and then I also, so for example here, I would not trade this minor downtrend. If you can you see the paintings I do? I hope you do. Yes.
Yep,
right.
I can see it.
So I would not trade this minor trend down. Some people would short it, but the thing is, it's basically trading against the trade. And I think that's where an old saying comes, pigs get slaughtered. That's where it gets slaughtered if you try to trade every way. So basically when I see the first red candle, I don't buy, I wait. And I wait for it to hit some sort of area of support. So right here, perfect. I've got, no, all right, it's not working. But you see, you've got support right here. You've got old lows, you've got your moving averages, you've got gaps. So you've got like basically 3 different types of support. So I'm just waiting for it to go back down here, and I see the first back green up candle, and that's when I go in. Or in reverse. Here, for example, you've got the overall trend going down, and I would not trade the minor trend back up again. I see the first red candle. That's when I would actually short, right? Because the overall trend is going down, and I see that the minor trend is coming to an end. So I'm getting in and then getting out based on, that first changing sign. That's kind of like the changing of the guard. The first sign that it changes, you just have to make sure that it goes in line with your overall strategy.
Yeah, I think the only thing that I would also want to add in there is take a look at the volume. The volume is going to also tell you a lot about why that red candle is there. is it a huge spike on volume? Did something like big happen that's caused this huge sell-off? Or is it more or less the same level of volume and the trend just kind of changed a little bit? Those are going to be two very different scenarios and how you handle it. Let's see here.
And I mean, that's basic Dow theory. So like when you have, you see the first red candle, and if the volume is high, that's an indicator that it's a reversal. When the volume is low, like here, for example, wrong mouse. Like here, for example, very low volume. Here, very high volume. Low volume means it's a continuation pattern. Like a flag pattern, pennant pattern, or so. So it's not much to worry about. Also, again, the size of the candle. Over here, you've got very small bodies, spinning tops. Here, you've got huge Marbozas just dropping down every day, also covering a lot of space with gaps.
All right, so let's see here. The next one, it looks like, is they know you don't trade fundamentals, but you do look for, but do you look for any kind of new earnings as a sign for potential movement, or are you just purely looking at chart patterns or gaps? So it looks like, are you looking for indicators other than chart patterns, or are you just looking for chart patterns?
So I only look at chart patterns. I mean, gaps are on the charts. The only other thing I would look at is volatility. I also explained it because it plays pretty big into option trading. But I don't, earnings, I just don't trade over earnings. So I generally ignore them, meaning the only reason why I care about earnings is that I exit my positions before earnings happens. Because to me, earnings is just too unpredictable. And trading options is an immense risk, because with options, there's a lot of leverage, meaning a $1 move would for me maybe mean $5 move, right? So if I all of a sudden have a surprise, oh damn, the stock just dropped by 20%, like for example, I saw Whole Foods gap on earnings, one time 30% down, then another 30% up. You just never know what happens. So it's way too risky for me to trade over earnings, so I basically ignore them. And news, no, I don't care about the news. I think a lot of the media out there that talks about stocks, from Jim Cramer to any CNN or whatever you're watching, it's news. It's there for entertainment. It's not really there for investment advice. And the main reason that is because they're not making money off you being profitable. They're making money off people turning on. And the way you get people to turn on, if you make a big fuss, if you're like, the stock market is crashing, you have to sell now, like things are crazy, or like, this stock, you won't believe it, it will go up like crazy. So they will always use very, very strong language to draw you in, because that's how they get quotes, So don't listen to the news, in my opinion. And even the papers, an important thing to realize is that analysts and brokers, those two mainly, analysts and brokers, and sometimes coaches, if they don't trade themselves, they do what they do because they can't make money trading themselves. If a coach trades, that's fine, because like, for example, for me, I enjoy the act of coaching as well as teaching others and sharing what I know. But if somebody only teaches finance, or if somebody only analyzes, or somebody only is a broker that transacts for you, it's kind of questionable, because like, if you really knew what you were doing, if you had this top analysis, how come you're not using it to become a millionaire, right? So just take it with a grain of salt, taking advice from other people. My general experience is that every single piece of advice I've taken from others has not worked out in my favor. It has to follow your plan. It has to make sense to you. So I rather choose my gut than just because even if my coach tells me, hey, this looks like a great trade, which he doesn't do, because good coaches, they won't sell positions on you. They won't be like, oh, you should take this. They don't pressure you. But it's almost never worked out in my favor. So stick to what you know.
Definitely. And I'll come in a little bit on the devil's advocate side and say that you absolutely can create strategies based around the news. But usually those strategies, in order to be profitable, it's not just generally watching the news. It's usually watching one or two particular companies, and how certain kinds of news will affect those. Like one that I particularly like watching is Tesla. I mentioned in quite a few of my different interviews throughout here, actually, that was my basically first kind of successful trade. I got in just after the IPO, wrote it up for a while, and then thought, hey, this is going to be awesome. I'm going to be a trader, make tons of money. And of course, went to lose almost all of it. But what I did learn was I learned how that particular company reacted to different kinds of news. So that's one that I do still watch. Another really common example would be something like Apple. Apple is probably one of the most famous examples of people using their product announcements for trading strategies. It's, I think over the last 10 years has some like ridiculously high, like 70 or 80% correlation between how it trades around product launches before and after. So there are ways that you can incorporate the news, but I would say as a general blanket statement, so again, take it for what it's worth, I would say that it's a little bit closer to gambling than it is about actually creating a strategy that will be sustainable for the long term.
Right. And like, I guess to give some credit to news, yes, you can use primary sources, meaning, look actually like what is Tesla releasing? What are some tests that Tesla's gone through? How's Elon Musk doing right now? Or Apple, what products are they launching? When are they launching it? That's primary data, that's primary information. But as soon as you take it from another analyst that says, you should buy Apple, it looks great, or, something like that, or just because there's a headline somewhere, that doesn't mean shit, So focus on, if you do choose fundamental analysis, focus on information that matters, and see how that plays out in the long term. So for example, if I were to be a long-term investor, which in a retirement account, yes, I'm 20, but I'm 21. I have a retirement account. Tesla is one of my next investments, just because I'm a huge fan of Elon Musk, and I have a lot of faith in him, and he's an incredible entrepreneur that has made incredible things happen. So I think it's pretty safe bet that most companies he runs would be successful. He's co-founded PayPal, Tesla, SpaceX, SolarCity, and so on. So sometimes, yes, it's valid to use fundamental data, but I would always back it up with technical analysis, which, for example, allowed me to get into Tesla when it was at its cheapest point, basically since the IPO at 130. And since then, it's pretty easy to determine tops and bottoms and get in and out at the right places. So a hybrid approach is definitely valid.
Definitely, and you really hit it there with that second comment, saying there's a difference between hearing it from a primary source, so like the company itself, or hearing something from an analyst or pundit on TV. And I think actually we can kind of combine two of these good questions here from Chris at the same time. She says, knowing you only trade $5 or higher stocks, how long does your average trade last, and how long do you usually hold on the average? And then she later asks, any software website you prefer to use when evaluating charts like you're doing now? So I think those are probably two that we can roll into one here.
Gotcha. So how long do I hold the average trade? Depending on the strategy. Like I said in the beginning, 2 to 5 days on average for my active swing trading account. For my IRA, which is a more medium-term swing trading, that's basically maybe like 2 weeks, 3 weeks. So basically, swings, I look at different swings. For my breakouts, for example, I want that quick spike before the first people start to sell again. So that's 2 to 5 days. For my IRA, you got like here, for example, the S&P got in right when the double bottom broke, and I'm still riding it up, but I'm probably getting out at 210. So that took me from basically 190 to 210. So that's a nice 10% return, and actually I'm trading the 3 times leverage. So I'm making a 30% return even in my retirement account, but it's just a little bit longer. And the software I'm using for analysis is TradingView. It's free. It's beautiful. I used to use different ones. Some of them were even paid, but they don't even come close to TradingView. Because TradingView has got an incredible amount of tools. You can chart all sorts of Fibonacci patterns. You can chart all sorts of chart patterns. You can put all sorts of indicators on there. It's like, honestly, like the best charting platform I've found to date. If you do want to practice back trading, and a lot of people don't know what that is, there's some other softwares that are good, like for example, Motive Wave. But then again, it costs you like $200 a month. So that's for most people not worth it. Therefore, trading for you is the shit. Use it. It's free. As for platform, again, I use Options House, and then I use other small tools, like for example, for screening, I use finviz.com. You can basically put in exactly what you want, and it spits out the stocks that fit your description. And I use iVolatility to track the volatility of different stocks. And then for earnings, I use Earnings Whisper. Shows you when the earnings is going to happen, and it kind of gives you an estimation of where they think it's going to go.
And then a nice little follow on there from guest 930 was, how long did it take you to become successful at trading?
There's short-term successful and there's long-term successful. So short-term successful, let's see, 2000. I guess there's different stages, and that's actually an interesting thing. It's kind of to go through cycles, and I'll answer the question straight on in a second. A lot of times you should, like, for example, I'll just talk in the I person. So I started off very successful with my paper trading. I just told you in the interview, I made 72% in my first 3 months. Was great. Once I started doing real money, I had a good first month, and then it kind of went downhill from there. And I think a big part of it is psychology, because when you do paper trading, there's no skin in the game, there's no risk. So a lot of times you let your winners run because you're not afraid of what's going to happen, or you get in earlier. Like basically you do everything right because you remove that emotion, that fear from the game. So once I started trading real money, I had that same mindset for maybe a month. I did really well. I loaded up my account with more and more money, and then I just basically blew it up. I didn't lose everything, no, but like I managed to lose, I think, like 50% in a short time. That includes a really shitty trade. Charting is tradingview.com. So basically I made that huge loss I talked about in the video. And from then on, because following the losses, I started to kind of like not reinvent the wheel. What's the word? I'm just kind of like, I backcycle. I'm thinking, if I'm losing this money using this strategy, there's another person sitting at the other end of the desk making my money. So what do I have to do to be on that side of the desk, you know? So you're just kind of reconfiguring your trading strategy. And it took me maybe 6 months to a year to be short-term successful again, meaning a couple, you know, like months in a row where I did amazing. So that's basically the first phase people find themselves in is make a lot of money and then blow it up. Many people quit after that period. That's kind of like when you're an early beginner, you have created success. First time it doesn't work, many people quit. I stuck through it. The second phase is you're consistently profitable. You know, you're making a lot of good trades. You're making money on average. However, let's say you're profitable 6 months out of 7, and on the 7th month, you break your rules and you fuck it up and you lose everything. That's the next phase people find themselves in, because at some point you get so overconfident in your strategy that you think you can do anything. And then the third phase, which I'm in now, luckily, is you've suffered enough, you've made enough shitty mistakes that you finally know for a fact that whatever you think you want to do that breaks your trading plan will not be worth it. So I would say it took me maybe like a year to become really consistently profitable without slip-ups anymore. And my profitability has since been increasing. You know, in the beginnings, I made a couple percent a month consistently. Then I made like in a 2-digit profit consistently. And then recently, you know, since like mid 2015, I've been, you know, crushing it with sometimes like 3-digit returns in a month. And my biggest losses sometimes after, you know, over a long time for now, my worst month was maybe like 4% loss. So the correlations, you know, like there's a huge difference, you know, very, very small losses, huge winnings. But again, took me a year. If you include what's called paper trading, it took me a little longer than a year. And unfortunately, according to statistics, most people quit after 6 months. So you just got to stick through. You got to learn from your mistakes. And like I said earlier, every single time when you have a losing trade, ask yourselves, what did that other person do that basically bought from me, or that I sold to, that made them a winning trader, you know? So yeah, just kind of go it from the end, you know, instead of looking at it from the beginning, look from the beginning. How much did I start with? I started with just $950. And I mean, over time, because I'm a fond believer in that, like I always kept putting in some more money. So it's weird because like basically I would, what you want to create, kind of treat it like a business, because the money has become real, has become more than just a number on the screen. Where I would send myself a check and then also write another one to fund it again. So I'm getting real money out that I'm using for my life. And then I'm putting it back in because I want to see the consistent growth. Because like I said, I start with 950, right? But I also sent another $1,000 maybe a few months later, because now if I make 10% on $2,000, it's a lot more than on $950. So if you have a small account size, never stop contributing as long as you're not blowing it up. Be consistent, and then add money to it as you can.
Yeah, there's actually a funny analogy that you kind of started to touch on when you were saying how you're losing, and then you wanted to figure out how to be the person on the other end of the table, and the kind of evolution of your trading through there. Mm-hmm. On Friday, we've got Aaron Fifield from Chat with Traders, and he has a really good kind of description of that whole process, where he says first you win and you don't know why, then you lose and you don't know why, then you continue losing but you know why, and then finally you start winning and you know why. And the big change kind of through the arc is the knowledge aspect, that the winning or losing really doesn't matter that much, but the big thing that changes is the knowledge that you gain along the way and that you stuck with it. Exactly. So I think I wanted to make sure we didn't lose any questions up here. So one of them we had, guest 327 said, when you see a pre-market full gap up or down and it changes your plan for the stock, how do you go about it and what are you thinking?
Oh yeah, we did skip a little bit. Okay, when you see a pre-market gap up or down and it changes your plan for the stock, how do you go about it? What are you thinking?
Okay, so the first thing, I'm assuming I'm in the trade already based on your question. So I'm in a trade, and my answer is very simple. Does the gap stop me out? Yes or no? Does the gap put me to my target? Yes or no? If it's neither, then I really don't care. Pre-market, I don't really stress about pre-market in swing trading, because I mean it's more day trading thing. For you look at pre-market to see what's great to day trade today, what's gapping up and so on. As for swing trading, I mean I have my triggers already, but unless they actually trigger at 9:30 when the market actually opens, it's not of too much value to me. So for my approach, being micro swing trading, where I can prepare the night before on a Sunday, I don't really need the pre-market, but from the back when I was day trading a lot more actively, which I'm not doing right now just because I'm finishing up classes in college. When I day trade, I do look at pre-market. So I'm looking at basically the most radical gaps, and like more, and like when I look at the gaps, I'm also looking that the stock is just not gapping in general. Like I want it to be normal stock that usually doesn't gap, but it now gaps, and I'm checking that the gap is above a significant point of resistance or below a significant point of support. Because once that stock opens, it's basically going to free fall or skyrocket if it is below that point. Because if it is below support, if it gaps below a support, that means there's thousands of traders out there which will be stopped out. So the second 9:30 hits, people will be stopped out, and because of the stopped out, the stock moves further down, and then because it moves further down, more people are being stopped out. So it's basically like a chain reaction of being stopped out. So pre-market is very important for day trading, because it lets you be in from the very beginning and not miss out on it.
Awesome. So there were a couple different questions in here. So for people interested in Felix's mentoring program, just send him a message over on his website. That's probably the easiest way for anyone who wants information on that. I know he's got a contact form and a link and everything, and so it's pretty easy to get a hold of him.
Yeah, and I offer different programs. I offer them for beginning traders that literally don't know what a stock is. And I'll also offer them to traders that maybe you've been trading for a couple of years, either small profits, break even, or maybe losing money, and that's what I call breakthrough coaching. So basically we'd get on the phone or get on Skype basically once every week, and I go over all your previous trades, and we also plan trades ahead of time. And the most important thing is it's not about giving you like the amazing stock picks. It's more about seeing how did you execute those trades? Those trades you planned last week, did you actually follow your plan, or where did that psychology come in that made you make really stupid choices? Because although sometimes we're sick and tired of hearing psychology makes 80% of everything, that's unfortunately the case. So kind of what I do in breakthrough coaching is kind of break down what's stopping you from being consistently profitable, because more than likely it's that 1 out of 10 times that stupid choice you make that's keeping you from being profitable. So, and then I'll condition you to get that out of your system and to always have the right gut feeling when you look at the chart. This is a winning trade, and you take it, and not just go somewhere like, oh, this could be good, I'm gonna try it. So just giving you that focus and giving you that decision and the overall steadfastness.
And then I guess a follow-on, do you have anywhere that you publicly verify your trades?
Yes. So, well, yes and no. I used to Profitly. I used to do it actively. I stopped it after a while just because it wasn't good enough for me. I'm still looking for a better platform just because the thing is you can put anything into Profitly. Unfortunately, Options House does not connect to Profitly yet. So it was automated, great, I would do it, but I have to put everything in manually, and I could as well put bullshit into it manually, which unfortunately a lot of people do. So I don't see as much value in it anymore. I used to do it very actively. I think I was ranked in the top 14 or top 10 at that point. However, there's also InvestFeed. I quit that also just because you have to enter it right then and there, when it happens. But when I'm in a trade, it's secondary to me. First of all, my focus is doing the trade. It's not going on some website to tell the world that I took that trade, because once I used to do that where I would text my students, hey, I just took that trade. And before I know it, I already missed my exit. So unless Profitly can make it a connection to Options House, which would be perfect, and Tim Sykes, please go for it. I think I emailed you before. Make it happen. I would do it right then and there. The best way to check whether I'm real or not is my Twitter. Oftentimes, I haven't done it recently, but back February, for example, I think, or January, my most recent was I live tweet, for example, in 5 minutes, this stock is going to break out. And 9 out of 10 times it breaks out. So I have plenty of Twitter evidence of where I called it right. So I use Twitter. Maybe if people like it, I'll get back on Profitly. However, like I said, I think there's a lot of fakes on there. So I think there's definitely some need for a good verification process, but I think Tim made the best out of it.
Yeah, and it's it is what it is. At the end of the day, if somebody is concerned about that, reach out to the person. In this case, reach out to Felix if that's something that you're concerned about, and I'm sure that he'd be happy to have that conversation with you guys. In person.
I also have a private trading room, and that's free. It's kind of like a group me chat where I oftentimes post my trades, or I say oh, watch this stock, it's going to happen. And if you're in that room and all my students see it, they see I'm real, just because if I say, let's say for example, Etsy, it's going to go up in 10 minutes. Etsy goes up in 10 minutes, shit, it's real. I can't fake that. I can't make that shit up, So on average, when I post things, they actually happen. And interestingly enough, my stock picks back when I did them, 100% of the stock picks I did were profitable, and a lot of them were profitable in crazy amounts. Where again, my stock picks were in the style I traded, meaning 2 to 5 days, and within a week span, they would gain anywhere from 5 to 40% in stock value, not option value. So there's plenty of ways you can verify me. If you're concerned, hit me up.
So there's a great question here that I actually love. Somebody, I guess 930 up here, said that they're having the problem where they're doing great in paper trading, but not so successful in real life trading, but they're getting better and better every day. So thanks for talking about that, which I actually love that one, because that was one of the biggest problems I had too, was making the transition to real money and kind of my mentality shifting. The biggest strategy that I actually had for that was probably the simplest. I literally just put a sticky note over my P&L box so I couldn't see it anymore. They go on to ask, do you use stop losses or just mental stop losses?
Okay, so I use stops, actually put in, like, in my brokerage account, stops on every single trade. It's part of my risk management rule, because I think mental stop losses, that's just another excuse to second guess yourself. Like, I'm talking already so much about psychology and how we oftentimes make bad decisions in the moment. So if you make it a mental stop loss, that's another second where you're like, should I really exit? Or, I mean, this could turn around. You're removing that question from your mind. So I always put a hard stop in. I put it in very sensible places, meaning I'm putting it below a support with buffer. You always want to give a little bit of a buffer because it can wick. But I think having an actual programmed stop is important. Furthermore, just because I want to be able to turn the market off, meaning I do other shit than trading between 9:30 and 4 o'clock, and I don't want to constantly be like, has it triggered yet? Has it triggered yet? If it will trigger, I get an email. It was sold. It is what it is. But I can sit in class. I can be with my girlfriend. I can study. I can do whatever I want. I can work on my company without having to worry every single second whether one of my 5 to 10 positions might be stopping out and I'm missing out and all of a sudden losing 10% or something crazy. So I would definitely say put in a programmed stop loss, but put it in a sensible position. Don't get greedy. That's one of the reasons why a lot of people get out of positions too early, or they lose money, is because they try to scalp so much money that they put the stop so tight that even though the stock is going your direction, you're getting stopped out. So at the very least, if you're a swing trader, put the stop below the prior candle's low, and that's the closest you should ever put it.
So there's one up here. Actually, really quick. We've been going for about an hour. How are you doing on time?
I'm fine. I can go.
Okay, cool. We'll keep going for a little while.
Questions.
So everyone, start thinking of your like best questions that you can possibly come up with, and we'll see how many we can get through here really quick. Guest 289 up here asks, is it good to follow different people or mentors? I'll even jump up and talk about that one really quick and just say, don't follow. It's great to watch what they're doing, but don't just blindly trade because somebody says to. I would instead say, watch that trade, see what it does, and see if you can figure out why they made the call that they did, and to understand it rather than to just follow it.
Yeah, and I think the biggest thing is if you can try out different mentors just to find what makes sense to you and what works for you. So, for example, for me, so like I start off reading books about fundamental analysis. Like, okay, cool. But once I looked into technical analysis, that made sense to me. So like I was like, I kind of get fundamental analysis, like why they use it, but technical analysis makes so much more sense to me because all the information, all the actual facts are in the charts. To me, fundamental analysis was too subjective to be used to base my trades on. So for example, step 1, it made sense to me. Step 2, does it work for you? So for example, Tim Sykes, what he does makes a lot of sense to me. Basically shorting pump and dump stocks makes a lot of sense. Would it work for me? Probably not, because like I'm a micro swing trader, again, because I want to spend a max of, let's say, 15 minutes a day on trading. I don't want to be stuck in front of the computer all the time. So day trading might not really be my thing. So it makes sense, but it doesn't really work with my lifestyle. So look for those two things. Try different mentors out until you really find somebody where you resonate with a strategy. Where like, this makes a lot of sense. I could explain it to my 5-year-old, and I'm confident using historic data that this actually works. And it works with the lifestyle I want to have and currently have, because nothing worse than like trying to fidget trading into a lifestyle that's not compatible. Like if you're working from 9 till 4, from 9 till 5, and then you secretly trying to trade while day trade while the boss isn't looking, that's just opening the door for more problems. First of all, that you might get fired, but secondly, that the chance is higher that like you miss an entry, or even worse yet, you miss an exit and then turn a winning trade into a losing trade because somebody was walking over you to close the window. So make sure it works with the lifestyle.
Definitely. And that's also another good one, is finding, like you said, finding the right style that matches the style of trading that you want. That was one of the big things for me. Was I initially thought, I was like, oh, I'm going to go in and do day trading and be great at that and make all this money every single day. Same thing, following the profit lead gurus and that sort of thing. But that wasn't the style that worked for me. The style that worked for me was a little bit more casual and relaxed swing trading style. And as soon as I gave up the idea of trying to force myself into day trading and do the swing trading, all of a sudden it made a lot more sense to me, and I found my success go up quite a bit. What are some tips for keeping your mind calm during a trade?
All right, so swing trading, I would say, first of all, there should be no reason why your mind isn't calm. So anything more than a day trade, your mind should be calm. And here's how: you have a trading plan, you determine your stop, and you determine your target. If it's not touching either, you're staying in. Stop worrying about it. Turn the phone off. Turn the computer off. If it stops out, or it hits if it hits your target, congratulations, you made a lot of money. If it stops you out, it happens. So nothing to worry about that. Day trading, I guess that's more where the calming your mind comes in, because there's a lot of like in the moment decisions you have to make. Again, the biggest thing that I've found work for me to calm my mind is to have a strict guide, meaning have your trading plan that says like this is what you do then. For example, if I see the first red candle, that means I'm exiting. Or if I see that the volume is decreasing and the moves are getting smaller, that means I'm exiting. Or if the price, meaning the candle, breaks the one, or like let's say the 5 candle moving average, that means I'm exiting. So set specific rules, because the reason your mind isn't calm is because you don't know what to do. And the reason to know what to do is to set yourself specific rules, to set yourself specific, almost like if-then statements. If this happens, then I do this. So like you could be freaking out, but like instead of freaking out, you'll see now, okay, well, what do I do? All right, this, and this, so I'm staying in. Or, you know what? It's the first red candle. The red candle is breaking through my moving average. Volume's been decreasing. I should exit. So the more and that's the thing, because people are attracted to the adrenaline of the stock market, because there's no rules. It's the one place in our lives where there's basically no rules. You can do whatever you want. You can buy and sell stock whether your wife tells you or not. But on the downside, it leads to you with so much adrenaline, but that adrenaline also leads a lot of times to scare, to fear, to having that lack of calm. Because almost every time we have either a boss or somebody looking over us or laws to tell us this is what you can and that's what you cannot do. So since nobody else is doing it for you, you have to do it for yourself. So you can write down, basically, that's why you can use paper trading. Like in paper trading, see like all the different outcomes, all the different scenarios that could happen, and then decide what is the best action to take in that scenario, and then repeat it all the time. And that's why trading is a skill and not just something that you do, because over time you see more and more chart patterns, you get more and more experiences. By now, like any chart pattern I see, it can be like, this is a lot like this and this chart pattern, and based on my previous trading experience, this is most likely going to happen. I know we have the famous statement, like past results are not indicative of future results, but statistically speaking, using technical analysis, it is a kind of an indicator, So you can use probability in your favor, just by seeing more chart patterns, knowing what to do with them, and then using that reference system of the past, basically, to make educated trading decisions in the future. And while you might not have it in the beginning, because that builds over time, you can bridge that gap of being a beginning trader and lacking that frame of reference by setting rules, by making a trading plan.
Yeah, definitely. And actually, you can even look up, there are there are graphs out there where people have charted the exact failure rate of chart patterns, where you could, if you had like a double bottom, you could see, all right, this particular pattern is accurate, for instance, I don't know what it is, it's like 80% of the time, or something along those lines. So you can actually look up and see exactly what the failure rates of different charts are. So there's a good one here from guest 327, who asks, what is the best book in your opinion to learn from, whether it's for swing trading or day trading, or patterns or psychology of the stock market? So I'll even make it a little bit broader. What are maybe some of your favorite trading or maybe even finance in general books that have really helped you out along the way? And while you're kind of thinking about that here for a really second, I'll give a quick shout out to anybody who's out there watching from the YouTube channel, because I can see we have a lot more viewers on the live stream here than we have currently on the website. So for anyone watching who isn't on the website and you want to ask your question, come on over to digitalstocksummit.com and click on watch on the top toolbar, and you'll find our chat window down here. You can throw in any questions that you may have. So with that, back to you, Felix, with your favorite books.
All right. So books, my number one favorite it's called Market Wizards by Jack Schwager. Basically, in my opinion, it's like one of the best books. It's basically him interviewing the 50 most successful traders of all time, and it's a whole series. Like, there's Market Wizards 1 because it was such a huge success. There's Market Wizards 2. There's Hedge Fund Wizards. I think there's 4 books by now. But basically, in the book, he interviews the most successful traders. Some traders like Ed Sykota that made, I think, 7-digit ROIs, like some crazy disgusting amounts of ROIs. And this is not just some fat guru. For example, that guy, he made 3-digit returns for like 10 years in a row. So a lot of very successful traders, some of them you don't really know about because they're less on marketing. They're doing so good they don't need to market, And in that book, he interviews them on, what kind, psychology, what patterns do they use, and most interestingly for me was that all the traders have different backgrounds. Some of them are fundamental traders. Some of them are technical traders. Some trade futures, some forex, some stocks, some options, basically all over the place. But the bottom line is that, and that's what a lot of other people will tell you, oh, you have to trade this to be profitable. It doesn't matter what vehicle you use. You can make money in any way, shape, or form. But what it really boils down to is having that stable system and having a certain set of values and having a certain psychology that you apply in trading. Because the vehicle, that's like it's like literally a vehicle, like a car. If you learn how to drive, you can drive any car basically. It's just a question if whether it's a Prius that's fuel efficient and slow, or if it's a race car. So the outcomes are different. But if you know how to trade, you can trade regardless. And the interesting thing about Market Wizards is because it's, in my opinion, the overall work is very unbiased, because you've got some amazing traders that call technical trading bogus, other call fundamental trading a waste of time. So it just gives you a very well-rounded view of trading in general, and that might be a great first lead for you to know what style might be right for me, and based off that, you can see some great traders and determine maybe one of them should be my mentor. More than likely, they're either no longer active, but maybe you can see other traders that kind of copying their style. So that's for my favorite book, Market Wizards by Jack Schwager. And I'll put it in the comments. But aside from that, I also read Trading in the Zone, also on psychology personally. One second. Personally, I don't like books on patterns and because that's fucking dry. It's really boring. I think there's this huge tome called technical analysis of stock trends or something like that. It's basically this thing that's been done since the 1930s. I think there's by now version 11, and they keep redoing it, but it's literally just pages of patterns, and it gets very boring. It's just not too exciting. So I prefer having a coach or taking a program that teaches you how to teach you the best patterns, that kind of like sifts through all this wealth of information that's available and tells you do this, this, and this, and it will work for you. So for me, for example, I read a ton of books. I spent thousands of dollars on online programs. I've taken different mentors. I've learned from 5 different people. So when I created my program, I was like, I don't really care much about selling subscriptions or selling as many classes as possible. I'm just going to make one program. And when I make that program, how can I make it most time efficient? Meaning, what's all the crap that I can cut out and just give you the most effective patterns, the most effective candlesticks, the most effective, because a lot of times during what I learned, there were sometimes classes where I cannot correlate. What I learned has nothing to do with me making money. And that's what trading education should always boil down to. Is what I'm learning right now going to help me make more money? Or is it just a fun fact? Basically, another college, because like in university and college, you learn a lot of fun facts and general knowledge that's great to know, makes you a well-rounded, educated person, but it does not help you make an ROI. So I think that answers it. So for psychology, lots of great books, Market Wizards, Trading in the Zone. As for learning patterns and actual strategies, I recommend taking online programs.
Definitely, and I know at least Market Wizards is listed on the resources page on here. So there's quite a few different books down at the bottom. I think 3 of those books are from our various different speakers here, and the other like 10 or so are just from different ones that I found very highly recommended and either have read myself or just were told about as being really good resources. So that's a good place to go check out. One disclaimer that I will throw in there, though, most of those are affiliate links. So if you end up buying something, I'll get a commission for it, but I'm not putting them up there just to get commissions. I put them up there because they're actually good resources. And so I think that this one also kind of ties into guest 428's question here of, is it worth signing up with a guru as a beginner or trying to find your own niche by analyzing the market, no matter how long it will take? They say that many say you won't do good by following one. So I don't know if you caught the little bit of a discussion that we had earlier about following gurus or not. My 2 cents is that they can be worth it to learn a lot of things in a little amount of time, but I would always throw in the caution of don't just blindly follow. If you want to take a trade that the guru happens to be in, do it because you came to your own conclusion, not because the guru told you to. The better method, in my opinion, is to look at what the guru is doing and determine why they made that decision. And the nice thing is that if you're paying for a service, in many cases, they will be available to, after the fact, you can come to them and say, hey, on this particular trade, I saw that you did, you went long or you went short. I think that you did it because of X, Y, and Z. Can you confirm or deny that, or can you tell me what your line of thinking was? And so you can get a little bit of feedback and actually learn a lot more than if you're just following the trends or following the signals. The signals aren't going to get you too far. In many cases, especially with some of the bigger services and gurus, you'll end up running into the issue where the guru went in, then alerted everybody, and you have a whole bunch of people that will follow them, which will then make the stocks move in some direction. And then by the time they sent their exit signal, you're sitting there holding the bag while they got out for a big profit. I definitely don't want to like slander anybody and say anything in particular there, but that's it's definitely a risk of many of the bigger gurus. So that's kind of my thoughts on it. Is use it for education. They're great for learning a ton in a short amount of time, especially if it's a little bit more intimate of a service where you actually get some face time with the guru. I know Felix is a little bit smaller. Sean Dekmar is another one of our speakers on here. His service, I think, is up to a little over 300 people right now. So his is starting to get bigger. But really at the end of the day, it just depends on what you're looking for, what kind of education that you want. But at the end of the day, I've said that twice now, and it's getting late. Whatever it is that you're looking for, it can always be a good thing to read books, read magazines, read blogs, do as much learning as you can. And then if you decide to use a mentor on top of that, use them more as kind of a sounding board. What are your thoughts there, Felix?
Yeah. Basically, like Tony Robbins says, like stand on the shoulders of giants. Having a mentor is a huge thing in my opinion. Like you definitely should not just try and learn it yourself, because that will cost a lot of money, will cost a lot of time, and more than likely, those two factors, losing money and time, will lead you to quit. So having a mentor, I think, is one of your number one priorities in beginning how to trade, because you wouldn't dare just try to figure out how to perform surgery on somebody by trying it out. Like you might kill someone in the process. So mentoring is very important. However, mentoring means I say yes to mentoring, I say no to gurus, just because the term guru kind of means you blindly follow. It almost sounds like a cult. You blindly follow, and the focus of a mentor should be that you learn what they do. You basically learn the best things they can give you, and then you form your own opinion. For me, guru is more like I'm selling you my stock picks, or that's why I stopped, because I don't really believe in it. Or I'm selling you my trading signals for $150 a month or $200 a month, and you never really learn how I pick them. But really, you just you pay every single month to copy what I did. And then again, it leads to kind of like this scenario that Jacob described, where I send it out to all my followers. First of all, I'm making money of you all subscribing. And furthermore, because all of you buy the stock now, my stock goes up. It's like market manipulation in a small sense. But as with everything on paper, it says it's for educational purposes only. I cannot make trading recommendations, as with every one of them. So I would say get a mentor to learn, find out what their strategies are, find out how they pick their stocks. Pay, and that's the thing. Pay a lot, like be willing to pay a lot to find out how they pick their stocks, but don't pay a lot of money to get their stock picks. It's kind of like, instead of constantly paying for fish, pay somebody to teach you how to fish. And then you can do it yourself. And then you can, like, at some point you can be like, you know what? I've learned everything I could from you. I can find my own system now, or I can try somebody else. But definitely invest your money into learning it properly. So because on a single trade, you can lose hundreds of dollars, you can lose thousands of dollars. I personally had a kid that who's been on the brink. He's like, I don't know, I kind of want to get coaching, but I don't know if the money. He manages $80,000 of his family's money, and at one point lost $20,000 in a week. Yet he cannot come up with the hundreds or like low thousands to pay for coaching. So, it's just mind-boggling to me. So, like, definitely invest that money to learn it, because it will pay off in the long term. Because if you plan on making thousands or millions or whatever your plan is, you should really be able to make that investment to learn it in the first place. Yes, I think that rounds it up. So definitely you can find your own niche, but first get some actual quick knowledge, because a mentor can speed things up 100-fold, 10-fold, whatever it is. And then you just sifting through books, which will be dry, slow, and confusing. I think.
Definitely. So I think we'll start wrapping up here. Maybe shoot for just a couple last minute questions here, and then start closing it up. Chris had a good one here. Is there any platform you recommend for paper trading? I think that's a nice fast one. What do you say?
All of them. I use Options House. Honestly, I can only really talk much about Options House because I've been using Options House since the dawn of time. They do have paper trading. I think it's a good platform. Go ahead and use it. I'm not getting anything out of saying it, but almost every single retail broker does offer paper trading. And if they don't, there's alternative options. So Options House has it. I'm pretty sure Thinkorswim has it, right?
Yep. Thinkorswim is my favorite one. They'll give you a fake $200,000 account and full access to their entire suite of tools. You don't have to fund your account or anything. You just go through the process of signing up for an account, and then when you get to the point where it says, "All right, time to fund your account," just don't fund it, and you'll still have full access to everything, all the entire suite of tools. That's the one that I use for practicing. I think there's quite a few other good trading simulators out there. It's really at the end of the day, you could write down what your fake trades would be on a piece of paper and see where you'll be. So it's kind of, as far as paper trading goes, there's lots of bells and whistles that you can find, but at the end of the day, it's still just, I would buy at X price, I would sell at X price.
Yeah. And somebody mentioned MarketWatch. Yeah, so there's simple platforms like MarketWatch or Wall Street Survivor, which was where I started with Wall Street Survivor. However, those two platforms, they lack a lot of capabilities. So it's nice for early dabbling. However, Thinkorswim or Options House, they will be exactly the same as your actual brokerage platform. So you will start to know how to navigate around it, because it can look confusing at first. And with Options House, for example, you can paper trade options, so you can practice option strategies. You can just look at the change at first, because neither MarketWatch or Wall Street Survivor offer options as far as I know. So using a real broker paper trading, again, it doesn't cost anything. Usually you can just skip through the sign up process. You don't have to put anything specific in, and it will allow you to basically have the real experience just with fake money.
Definitely, and thank all of you guys. I've seen a few people in here thanking us. Thank you guys so much for showing up. Without you guys, we'd just be talking to no one. There's one I saw fly by up here.
What do you think of algorithmic trading?
Yeah, what do you think of algorithmic trading?
I think it's extremely interesting. I actually went through the effort, not past tense. I am going through the effort of learning how to code. So I want to kind of learn how to code my strategy into an algorithm. So to have personal experience with it, not yet. However, I've done my fair due diligence to review a lot of the companies that are out there, and I would definitely approach it with caution, because I guess I'm sorry for blasting them, but I looked up. I think it's called 10% a month. So that's an auto bot that Options House supports, and the title is 10% a month. And on the average month, let's say 7 out of 10 times, yes, they do make 10% a month. However, with most of these auto bots, this sounds like Transformers, but the algorithmic trading bots, they work, let's say 7 out of 10 times, but if you look at the performance, and they have to show them online to be transparent, so you can actually look at the records. And a lot of times it's scary. For example, in 1 year, 10% a month, they lost 68% or something along those lines, or another month they lose 30%. And the issue is, if we make it a real quick example, if you have $1,000, you make 3 months of 10%. That puts it 1,100, then it puts you at 1,210, then it puts you at 1,420. That was quick math. 1,420. Now, if you lose 30%, you lose almost $500. So that actually puts you below what you started with. So while 3 out of 4 times you might be making your 10%, that one bad month actually knocks out all the profits. So because what you have to keep in mind is that you can make that's an interesting example. You can make 10 times 100% of ROI, but it only takes one single 100 ROI percent loss to destroy it all, because there's infinite upside, but there's a limited downside. So the downside always takes you back further, because like I just said, when you make more money, that means the next percentage loss will also be bigger numerically. What I use for coding, I think it's called Cloud9 Trader, but also MetaTrader allows you some algorithmic programming. Again, I haven't been much into it, but I'm getting into it now just because I find it very interesting. And I do think more and more stuff will be automatized. And even though I might not completely automatize my trading, it's still I can automatize steps of it. If you think about it, compared to 10 years ago, 20 years ago, the stop loss is basically a new automation. I put it into my brokerage account, it's programmed, I can go to sleep or I can walk away and it automatically sells it for me. Or if then statements where for example, if the stock is higher than this, then buy this stock with a stop loss at this. So you can already program a lot using a regular brokerage account. So I just think, out of curiosity, it's interesting to automatize more and more and more. Why? Because automatization takes out the psychology, which we've identified is one of the biggest risks involved in trading. However, I still think humans and a human trader will beat a computer trader, just because if I look at chart patterns, for example, chart patterns are not, they're more an art than a science. They're not always book perfect, they don't always look exactly the same way, but an eye can catch it. And I feel like there will be a lot of slip ups if you try to find a way to program it in a way that captures all the scenarios. So I don't know.
Yeah, it's kind of like the systems that you talked about in your session about like how you will plan out a trade. It's kind of like that on steroids, where it's you put in this set of rules and it's going to be very, very strict about executing those rules no matter what. So another really great session for anybody who's interested in algorithms and systems will be day 5. We've got Aaron, and let me pull this up really quick. Aaron, Kevin, and Andrew, all 3 of them talk about either algorithms or systems in some way or another. So those will be some really interesting ones. Aaron specifically talks about trying to learn Python for his programming systems. I was trying Python for a little while. It was fun. But I haven't really implemented it in my trading at all. For anyone also, I guess another good system for that is Thinkorswim, because they allow you to use what they call ThinkScript, which is basically like their version of JavaScript. So somebody who's interested in algos might you can either go Python for most of these other platforms, or if you want to go the JavaScript based route, then Thinkorswim will be a good one with their ThinkScript. See, somebody asked me who were my mentors and how long have I been trading. I have been trading, gosh, I guess it's been off and on 9 years now. Now that's not full-time trading. I'm actually not even a full-time trader right now. I look, I was reading the comments when I said that. I do part-time. I like swing trading. I like having a lot of other things going on in my life. So I have my own company. I am also a VP for another company. So I definitely keep busy. So I've been off and on for about 9 years. And my mentor, I actually got started on Profitly. I like them as kind of an intro to trading sort of mentorship, whereas they're really great, especially Tim, the founder. He's really great at showing you what is possible. Now, I would also put the caveat on there that I didn't actually learn that much. I got a basic foundation, but it wasn't the system that worked out for me. As I've kind of mentioned a few times, my preferred strategy is swing trading, which is not what he does. So I would say that's a great one to start with, just kind of show you what's possible. But then I would highly recommend other ones like Investors Live. Even Bulls on Wall Street's not bad. Trade on the Fly is a great one that Jesse talks about on tomorrow, I believe. Tomorrow, is he? Yep, Jesse's up tomorrow, so he'll talk about his mentors at Trade on the Fly and Investors Live if you're interested in knowing a little bit more about them. Let my beard grow again. Thank you. I appreciate that. It makes me look tough. I changed up for the hopefully oncoming soon warmer weather. It was weird shaving. I didn't recognize myself in the mirror. Let's see. So I think we'll maybe wrap up here with Johnny P's. What's our opinion on prop firms and breaking into one? As someone who's doing decent with a small account, should I wait until I'm done with university or see how it plays out grinding with an account less than 25K?
Okay. I mean, I got a good opinion on that just because basically since I was 19, I've been like recruited by prop firms. The only issue was that actually since I was 18, but the problem was that company policy requires me to be 21. So I basically went through 120 pages of contract work because there's a lot of, background checks and all that stuff because it's with the SEC, it's highly regulated, fingerprints and all that shit. And I was basically ready to get started. I already sent in my check for my Series 656. And all of a sudden, like, wait a second. Wait, you're not 21? And like, I guess that never happened to them, that somebody under 21 like was getting recruited and like, oh, I'm sorry, like it's against like our national headquarters company policy, and they have like offices all across the US, including New York. So that never happened. But that process made me look a lot into prop firms. So what I'll say to this is I think there's a lot of value in them. Because like you said, with a small account, you've got incredible leverage. With $5,000 account, which is the general starting cap, you have access to $100,000 of buying power on a day. And furthermore, the next benefit is you've got a risk manager looking over your shoulder, so you've got accountability. And thirdly, you've kind of got that professional feel, because like I was in the prop firm for a couple of days, just paper trading, and like he would like take me on his wing kind of as a mentor. So and I experienced, like there's 30 people sitting on like with 4 screens, focused on trading. People are shouting out different symbols. They're having pep talk at like 9 or like at 8:30 before the market opens, discussing what to watch, like reminding them, getting them in the zone. So like, I think there's definitely a great, incredible environment. You've got your accountability, you've got the leverage, but what it in the end boils down to is the numbers. So if you have a $5,000 account, like you just have to ask yourself, how much percentage can I realistically make? And like be honest with yourself, be realistic with yourself. That's step one, because with any prop firm, there's costs associated to it. So the one I was looking at, if I take the bare minimum of like packages, because you have to take a package of like stock quotes, desk fees, and so on, it ended up being $300 a month. So if you cannot make the $300 a month in trading profits, maybe it's not the right route to take, because on top, you're locking with a prop firm, you're locking down your initial deposit for a whole year, which means for a whole year you can't take it out, which means you sign up with a firm. So $300 times 12 months will be deducted from your account if nothing happens. If everything stays the same, you're already losing $3,600. So most of your portfolio will be eaten up just by being there. So you have to be a very good trader or start with a bigger cap to be profitable, because the bottom line is the prop firm will make money whether or not you're successful. That's the unfortunate downside, but they do offer a lot of value. So if you think the value they offer along with your skill will allow you to be profitable, I think it's an awesome opportunity. It's awesome. It's just like it's a great system, because you're independent. It's not like a job where like you're forced to come in, you keep 90% of the profit. So like I keep most of my profits. I can come in whether I want to or not. Basically, the responsibility rests on me. But there's a ton of support I'm receiving. So if it works for you, you just got to put in the dedication, you got to put in the time, and you have to make sure that with the account size times your monthly expected return minus the monthly fees ends up being a positive number. Otherwise, it's a revolving door. People try it out, blow up their accounts, next one. That's why they're always recruiting. Jacob, you still there?
Yep, I'm here. So I was just reading this last comment here from Johnny. He's saying that he can definitely do. He just started using the 6-to-1 with SureTrader and is only paying fees of $1,200 a year. So he's weighing out the pros and cons. He's been through enough rides in his life in order to keep himself composed at a prep firm. Mm-hmm. I don't have a whole lot of experience myself with them. I looked into them very, very briefly and then decided I just kind of wanted to go independent. So I wouldn't be the best resource. Though I will say that tomorrow's speaker, Jason Levitt, session number 2, he was a prop guy his whole career until just very recently. He went independent, and so I asked him a little bit about that. So that might be a good another good session for you to check out. from the other end of the spectrum, someone who's been there for quite a while and then is just now leaving, and he talks a little bit into that. So I think with that, what do you think, Felix? Time to wrap up?
Yeah, I'm just reading some of the comments. Yeah, low. I would say
cool.
good for showing what is possible. Okay, thank you. Exactly that I can do. Prop firm. Yeah. So I guess for Johnny, just keep in mind, the biggest thing is that you create that system, that plan before you start on the prop firm, and then stick to it. Because I think the biggest mistake people make at prop firms, which is why they pull up their accounts, is because all of a sudden they have access to 20-to-1 margin. And with that sort of leverage, you're now taking you kind of like throwing risk management out the window, and you're just trying things out. So still apply strict rules. And now it's like, even though you have 100,000 available, slowly move your way towards that number, because otherwise, with $100,000 and 20-to-1 margin, that means 5%. If you lose 5% of the $100,000, your count is done, right? So just bear that in mind, But other than that, I think we've had a great session, lots of great questions. I love the enthusiasm. I think you can find most of my stuff on my account page, but I just posted my Twitter link. It's Felix O. Hartmann. I'm also on Instagram, Felix_Hartmann. Snapchat me, whatever you want, and my website, felix-hartmann.com. I got a couple blogs, a lot more blogging in the future. I'm actually starting my YouTube account soon, where I'm giving free trading advice. I've got the trading room, so shoot me in the contact form your phone number, and I'll add you to the trading room. Again, it's free. And then coming this summer, I will launch a trading program, which just based on my values, like most likely I will make it a one-time purchase kind of thing, where you have access to my coaching. Basically what I coach people private, because until now I only do private coaching, but I've got so many requests that I can't really handle them all. So what I'm doing is I'm kind of recording them, that that 10 sessions that take from zero to hero kind of, and record them, make them scalable so that people can watch them at their own time for an affordable price.
Awesome. Yeah, definitely. And feel free to reach out to either of us. He threw his Twitter handle there in the chat. For anyone who is listening in later, it's at Felix O. Hartmann with 2 N's. On Twitter, I am at WhitishJ, WHITISHJ. We have both of our info on the website. Feel free to reach out anytime. For everyone who's watching, definitely tune in tomorrow. We've got 4 different sessions: Sean Deckmore, Jason Levitt, Ed Martin, and Jesse, aka Psycho on Wall Street. And then another live Q&A with Ben Ryan. He's a professional gold options trader. So if you're ever interested in what it's like on the professional side, or trading commodities, or just any more trading questions that you want to throw out there, we'll be live again tomorrow, 5 p.m. Pacific, 8 p.m. Eastern. And with that, I think we'll kind of wrap things up here. I'll shut off the broadcast, but I know I'll at least be in the chat room for a little while longer. If anyone has any other questions, that's where we'll be. All right. Well, cool. Thank you so much. And thank you, Felix.
Thanks, man. It's been a pleasure. I mean, I hope everyone that attended, got a lot of value out of this. Trying to be as real as possible here, giving you all I can. And if there's anything else you forgot about today, you can find me on my website, Twitter, whatever. I answer like every single DM, message, email I get. Sometimes it takes a few days. Quickest way, hit me up on Twitter, and you got it.
Awesome. Cool. All right. We'll see you later, everybody.
Thanks for joining, guys.